Welcome to another informative Tennant Group video. My name is Steve Tennant and I am the Managing Director of the Tennant Group, as well as a sponsored trustee on the Diversified Umbrella Funds. We're excited to announce that the NCA has granted the Diversified Umbrella Funds approval to provide in-fund home loans to you, the members of the fund. Within Tenant Administration Services, the housing loans are not outsourced to another credit provider. You, as the member, rather take the loan directly from your share of fund, which you then pay back into your own fund monthly. This manner of taking a home loan is the best way, as you are using part of your own share of fund, which is not affected by the investment drawdowns. Alternative home loan facilities use sureties. Such sureties could lead to a mismatch between the value of your share of fund and the amount required to settle the surety should the market drop. When an outsourced service provider is used, the costs are also higher for you, which is not in your best interest. We, the trustees of the Diversified Umbrella Funds, have agreed that you will be allowed to apply for a home loan equaling 60% of your share of fund value, less the tax payable on that amount. The minimum loan is 5,000 Rand and the maximum term is 20 years. However, this is limited to the period until your normal retirement date. There is a once-off fee of 320 Rand and an ongoing monthly fee of 19 Rand, which is payable to Tenant Administration Services to manage the home loan. The following criteria must be met before you can apply for a home loan from the Diversified Umbrella Funds. You must be an active member of the fund and must be contributing monthly. You, as the member, must own the property or own the rights to build on the property. And either yourself or one of your dependents must live on the property. You may only use the home loan for the following reasons: to repay an existing loan in respect of such property, to acquire or erect immovable property, to make additions, alterations, or to maintain and repair a residential building, including installing a JoJo tank within your own property and installing solar panels within your own property. From your perspective, how does this all work and what will the process entail? You will need to ascertain your available share of fund benefit. This can be done either by getting the value from the Tenant app, or you can contact your administrator directly. To get the exact amount of the possible home loan, the administrator will calculate 60% of your share of fund and reduce that value by the latest tax amount applicable should you exit the fund. This will be the maximum amount you will be able to borrow. You, as the member, will be required to get approval for the loan amount by getting a credit check report from the National Credit Regulator. Please remember, this is a legal requirement which proves that you are able to afford the repayments. The cost of the credit check must be borne by yourself and is not refundable should you fail such check. Alternatively, you can make a direct payment of approximately 207 Rands, including VAT, to Tenant Administration Services, who in turn will obtain the credit check report on your behalf. It is important to note that you cannot use the once per annum free check that service providers offer, as it does not reflect a credit score. Supporting documentation, including a completed income and expenditure sheet, 3 months bank statements, and proof that the property is in your name, must be submitted to the administrator. Once you have been approved for the value you would like to loan, a pre-agreement document, which is drawn up by Tenant Administration Services, will be sent to the trustees along with the credit check report and supporting documents. The trustees will then either approve the loan or not. The trustees may request further documentation from you if they deem it necessary. Once the loan has been approved by the trustees, they will sign all the necessary documents, and these will be sent to your employer and then yourself for signature. Once this has all been concluded, the loan amount agreed upon will be paid directly into your bank account. The monthly home loan repayments will be deducted from your salary by your employer and paid across to the Diversified Umbrella Fund, along with your normal contributions as one payment. The interest rate applicable to your loan is set out in Notice 2 of 2017, which is the repo rate plus 2%. The benefit of this arrangement is that it applies to all members. No one is penalized for being a higher risk candidate than the next. Your annual benefit statement will include your home loan statement. This will allow you to see how much is outstanding and how much has been paid into your retirement fund. If you leave the service of your employer, the normal exit process is followed. Tax will still be applied for on the entire benefit, including the home loan portion, and paid across to SARS. The remainder of the benefit then is payable to yourself. Please remember that even though you are borrowing a portion of your own retirement fund, this is still a credit loan and is a legally binding transaction. All the terms and conditions are set out in the home loan agreement. As you pay the interest into your own share of fund, the real cost of borrowing is the difference between the fund investment return and what you have paid in interest. It is only when the average fund return exceeds double the interest rate paid by yourself that you will be worse off. Should you have any questions, please feel free to contact your employer, broker or consultant directly. You may alternatively contact Melanie Nimon or Marie Hutting at the Tennant offices. Thanks for watching.